Evolution Equity Partners recently announced a $1 billion cybersecurity venture fund. We're going to talk about their strategy, all things AI, and IPOs in the cybersecurity sector, only on Taking Stock.
We started Evolution Equity Partners over 15 years ago, and that was after a time period. We were operators. We were building a cybersecurity company called AVG Technologies that ultimately we took public right here in a New York Stock Exchange in 2012. And during that time period, we accumulated a playbook around company building. And that playbook sets the foundation for what we do today. And that's really helping cybersecurity companies grow, excelling that growth internationally, aiding on marketing and sales, product technology, human capital, business development, and having an entire focus on cybersecurity allows us to add value in ways that helps our companies grow.
Tell me more about those specific investments.
Previously, we invested in a company called Security Scorecard. Security Scorecard is a cybersecurity risk ratings platform. Think about Moody's, Fitch, S&P for cyber, rating 20 million companies worldwide and providing chief security officers and boards of directors a unified way of looking at cybersecurity risk. Essentially, Security Scorecard bridges the chasm between chief security officer and layperson board members who often, in the past at least, communication on cyber and understanding cybersecurity risk wasn't as precise as necessary. Security Scorecard goes a long way in mitigating that risk with their platform. Another company we invested in, Arctic Wolf. Arctic Wolf is the leader in managed detection and response. Company has grown tremendously over the last decade, on its pathway to bigger things over the next couple of years. And very pleased to have invested in that company where the focus is on enterprise and mid-market cybersecurity tools and technology.
The fundraising environment has been quite challenging in recent years. However, Evolution Equity Partners has been able to grow $125 million and leverage it to over $1 billion in capital. Tell me about that journey.
You know, that journey is over a decade old, and when we raised our first fund, $125 million, the cybersecurity market was growing tremendously. It has grown tremendously since. And the $1.1 billion fund that we closed yesterday reflects the opportunity in the market. And we've already invested in 20 companies in this most recent fund, well on the way of investing in that in a well-diversified portfolio of growth, early growth stage and later stage, providing our investors a diversified exposure to a hard-to-access category, the private market cybersecurity space.
And you know, you've invested heavily in the AI, ML companies, right? Talk to me exactly about how AI and ML are impacting the cybersecurity landscape.
Look, machine learning and AI have been part of the cybersecurity stack for over a decade. And we've been investing in cybersecurity companies that integrate machine learning and AI since 2010, when we invested in a company called Cognitive Security, which was an early player in machine learning and AI, looking at net flow data, advanced persistent threats. That company ultimately, we exited to Cisco, who used that as a platform to build their machine learning and AI capabilities. But fast forward a decade and a few companies that we've invested in over that decade, and the onset of large language models and generative AI all of a sudden expands that attack surface, enables attackers in a certain way to have even greater advantages on the asymmetry side. So think about in the past where hackers, just for example, would apply 20 people to enable an attack. All of a sudden, when you integrate machine learning and AI, you reduce that cost to 5 people, skewing the asymmetries in favor of the attackers on the other side, on the defense sides and the defenders. We're seeing tremendous companies that are building platforms to defend and protect against machine learning and AI enabled attacks. I'll give you a few examples. A company called Protect AI. Protect AI does exactly as its name indicates. It protects the machine learning and AI builder ecosystem, enabling developers and builders to build machine learning and AI algorithms in a protected way before it goes into production. So foundationally, we're getting those algorithms in production in a safe way. It's a key area. It's where hackers, nation state adversaries, criminals are focusing on today. And we're proud to have backed Protect AI, which is a big player in this space. I'll talk about Torque as well, because Torque plays on a force multiplier of hyperautomation, machine learning, and AI, is growing tremendously, and it enables security operations centers the type of efficiencies that are required in today's market. A tremendous team out of Israel, growing rapidly. Those are the two companies out of the most recent portfolio that are focused on that machine learning and AI and automation segment. But having said that, almost every portfolio company utilizes machine learning and AI. It's table stakes for cybersecurity and has become integral to the cybersecurity stack.
Now, as operators, you were previously executives of AVG Technologies, a company that went public here at the NYC in 2012. Tell me about how it feels to be back here on the trading floor.
It was a tremendous journey, just looking up at the platform here where we stood in 2012, and it was a great feeling. And at that time, cybersecurity companies, the number of cybersecurity companies that were listed were far less. And the size of those companies in terms of revenue and equity value was certainly not anything close to what you're seeing today with regard to the Palo Altos and the CrowdStrike. So I think the industry has grown then. Certainly the attack surface has expanded. Regulation and compliance have become a key part of this industry in terms of the requirements on boards of directors. It is a fiduciary duty today to enable an organization to have the right cybersecurity in place. And over that next decade, from 2012 to 2022, the category grew exponentially. So when you look at the spend in and around 2010, it was about 50 billion. As we went on to the next decade, 100 billion. McKinsey Consulting forecasts that over the next decade, this category grows 10x on the current vendor base of cybersecurity spend to a $2 trillion category. So that journey from 2012 to where we are today has been significant in terms of growth, the nature of the attacker, and the growth of cybersecurity companies overall. So we see tremendous opportunity going forward. It's one of the most important areas in software today, and we're pleased to be backing the market leaders in this category.
And you're here at the New York Stock Exchange, epicenter of global financial markets. What would you like to tell investors, especially when it comes to cybersecurity and the IPO market?
I think if you look out over the next 12 to 18 months, you're going to see high quality businesses come out that have been growing over the last decade, are mature, are positioned well to stand up on that platform, ring the bell, and drive investor returns. The growth in this category has been tremendous. I think this year you'll see a few IPOs. There's a few that are noted and lined up to go, but I think the vast majority of IPO in the cybersecurity space will be post-election, where there's more certainty, into 2025, where you'll see those high quality businesses go out. There's a few that are lined up today that are very high quality, and we're looking to see how those perform. I think on the back of that, you'll see some decisions made as to when IPOs will happen.
A lot to look out for.
Absolutely.
Thank you, Richard, for joining me on Taking Stock.
Thanks, Trinity. It's been great.